Hi, this is Zach Muir from Zach's Traders Cafe with a look at some bulletin board hero stocks for Monday the 20th of June. Starting off with Churchill Mining and decent progress here, second time lucky through the 200-day moving average. That's the black line there at 19 pence. Also the floor of this rising trend channel, which was the rebound zone for last month, and the 50-day moving average just above 19.5. So plenty of decent momentum coming in through here. Extended bull flag here, based at the 10-day moving average at 22 pence. The view at this stage is that as little as an end-of-day close through 25 pence, which was the initial June peak, should be enough to take the shares on to 35 pence over the following 6 to 8 weeks. Stop loss back below the 200-day moving average and the October rising trend channel floor at 19 pence. Next up, a stock which looks rather strange on a charting basis, I suppose, with this turning on a dime that we had from the 1.25 pence level. What will be interesting now for next week, now that we've closed back above that old low from December at 1.77 pence, is whether we can break this resistance line from January and the 50-day moving average at 2.34 pence. End of day close back above that double notional resistance should take us through for a retest of 4 pence plus the initial highs of the year. Stop loss at this stage probably can be as tight as an end of day close back below 1.77 pence, or at least that would be a decent warning on a potential failure for the shares. Just worth looking again at Kimberley Enterprises. Still seemingly endless consolidation between 0.75 pence, the 50-day moving average, and 1.5 pence, the resistance, or the recent resistance for June. The easiest thing here obviously is to wait for an end of day close above 1.5 pence to then target 3 pence, but we have the RSI as a leading indicator on the upside given the double bounce that we've seen at neutral 50. So this should go through, especially the way given the way that all the near-term moving averages are now rising, even the 200-day line. So if you're an aggressive trader, you'd already be going long or be long of that stock. Even more strange configuration here at Metminco, where we've had this horrible bull trap through a quarter of a penny through the old May resistance, and then back down again. Looks as though this area down to the old 0.122 January support could hold, and at least that makes for a decent support point as for those who think that there might be a flip to the upside back towards the 50-day moving average at 0.19 pence. Moving along to Optibiotics, which has been rather more straightforward both on a fundamental and a technical basis in the recent past. The 200-day moving average there at 72.39 pence. What was interesting about Friday's price action was the key reversal to the upside, just with the narrowest of bear traps below the 200-day line, and then flipping higher by 10 pence plus by the end of the day. So very impressive, and it does suggest that we're back in the game as far as a possible £1.30 target at the top of this rising trend channel from last summer. Time frame there probably the next 2 to 3 months. Early cautious traders really waiting on that clearance of the 88 pence initial June resistance, but after Friday's price action, really looks as though we are back on the front foot with the bull argument at Optibiotics. Finishing off with Zincox Resources, which not quite as straightforward, obviously. Here we've got situation with a gap through the 50-day moving average, 0.73 pence, and that does at least provide a decent buy signal. While there's no break back below the 50-day line, one can justifiably look towards the 1.2 pence resistance zone of March. Only back below the floor of the gap, 0.62, really killing the idea of a recovery and an eventual 1.4 pence target. That's it for me. More updates at the same time tomorrow.